Morning, everybody. Mike Niemiec here with early morning grain and oilseed comments for the end of the year, Thursday, December 31st. Forgive me for looking down in here, but just we're going to recap where we're at so far for the week, month, and year. Overnight, first off, we're kind of unchanged. They're down slightly. We're going to be awaiting weekly sales. They'll be coming out shortly. See how that's going. Obviously, the demand pace for the U.S. hasn't been too good, which is one of the reasons why for the week we're kind of unchanged in wheat. We're down a nickel in corn, mixed in the beans, down $3 in the meal, and down 10 points in the soybean oil. But for the month, here's where it gets to be a little bit more aggressive. We're down around 8 cents in wheat, down 15 in corn, down around 10 cents in beans, $19 in meal, but up 135 points in the soybean oil. And then for the year, the real kicker, we're down 107, or down $1.20 in wheat, down roughly 40 cents in corn, down $1.50 in beans, down $80 in meal, and down 120 points in the soybean oil. So you can see it's been a very sharply down year for grain and oilseed prices. And the other thing is that what happened with the specs. They were net long 100 million bushels of wheat. Now they're short 350 million bushels of wheat. They were long close to 1.2 billion bushels of corn. Now they're short 465. They were short 200 million bushels of beans. Now they're short 205. They were long 54,000 meal. Now they're short around 30,000 meal, and they were long 35,000 oil, but now they're long 70,000 oil. So you can see it's been a big year of flat price declines. The meal market, which has been the leader for the past 2 or 3 years, it was in demise for the tail end of the year. That brought down crushing margins. Crushing margins were down 7 cents for the week, 17 cents for the month, and down nearly 35 cents for the year. So the crushing margins got hit, led by the meal. That helped the oil share. And we also found where the specs went from net longs to net shorts. So obviously the demand pace has not been very good for the U.S., which has kept carryouts large. That's also been indicative of staying that way if South America has a good crop. And then the next thing we'll be getting into is the USDA reports in January to confirm large carryouts. And then finally, what is our acreage going to be next year? And if we have another good growing season, are we just going to have an up year or perhaps another down year? And the reasons why we're thinking that it's a non-bullish environment potentially going lower is we've got to solve the problem of overproduction and the U.S. not getting any demand, and we're not going to be doing that by going higher in prices versus the rest of the world, which is cheaper. Have a happy new year. Once again, these are my opinions, not that of ADM or ADMIS. Thank you.